Get to that breaking news. It is crossing from the Fed right now. It involves the banks, and Leslie Picker has the headlines for us. Leslie.
It does indeed involve the banks, David. In prepared remarks at the Brookings Institution, Fed Vice Chair Michael Barr is recommending a reproposal of capital rules that cuts in half the additional buffer the largest banks need to hold. Barr said capital requirements under the reproposal for the 8 largest banks in the U.S. would increase by 9%. The initial plan outlined last July 2023, had that metric going up by 19%. Banks with more than $100 billion in assets that are not the 8 largest, mid-sized banks and large regionals essentially, won't be subjected to the changes, which I'll detail in a second, other than to recognized unrealized gains and losses of their securities in regulatory capital. That's a nod essentially to what happened with last year's regional turmoil. Barr estimates that will be equivalent to a 3 to 4% increase in capital requirements for this cohort in the long run. The reproposal waters down some key points that were met with fierce opposition from banks and other bedfellows, including small business, farmers, and even the NAACP. One of the more contentious areas was capital treatment for trading and derivatives activities. This reproposal allows for banks to use internal models for so-called market risk alongside a multi-year implementation period for tests that ensure the model is working. With regard to credit risk, which protects against bank loans that won't be fully repaid, Barr says the new Basel will reduce risk weights for residential real estate and retail exposures, among other changes. And Barr would also like a reproposal to decrease risk weights for tax credit equity financing structures and no longer adjust operational risk based on loss history and tweak the calculation to produce more consistency on how operational risk is measured. The question now that we've gotten this kind of preview of a reproposal is what the response from the banking community will be, whether these changes satisfy their many, many complaints, as well as whether the Fed has consensus with the FDIC, the OCC, as well as its own members. Guys.
That's what I was going to ask you, Leslie. So the Fed is going to back this, presumably, and the OCC. Question is more the FDIC, right? Their chair is a Democrat, but there are a few key Republican board members, and there are questions about whether they would back this, right, especially if the bank lobby tells them not to.
Yeah, the initial proposal was definitely met, drawn by party lines. And Fed Chair Powell has said throughout this entire process that he wants consensus. Now, what consensus means is the big question here is, 2 members in opposition on the Fed. Does that warrant consensus? We don't know exactly at this time. And then the question about a reproposal versus editing. There was some contention among the agencies. Remember, this has to be brought to the fore from an interagency perspective. But some of the agencies, the FDIC and OCC, were kind of in disagreement with the Fed on how to put this forward, whether it be a reproposal that would require a significant comment period, which can take, months, if not even, well into 2025 to see this actually take effect. Or is it something that it could be just some simple edits? It sounds like some extreme edits without a full reproposal, comment period, and the like. So it all comes down to timing. And then, of course, we have this presidential election in a few months' time.
I have to think the presidential election factors in here, Leslie, and the fact that Kamala Harris's chances have increased. Maybe this is as good as the banks can get into a Harris administration versus a few weeks ago when it looked like Donald Trump had better chances, where maybe they would have been more willing to fight it. Fascinating. And I'm excited to talk to some bank CEOs about it today. I also wonder, Leslie, how this stacks up against some of the competitive banks over in Europe and in the UK, because that was one of the big arguments from the U.S. banks, that it was going to hurt their competitiveness because these rules were more onerous than what their counterparts faced overseas.
Exactly. And I think this is actually something that Goldman Sachs CEO David Solomon mentioned yesterday when he was speaking at that very conference you're at, Sarah. He said that when the initial Basel concept was brought to the banking industry, the idea was to put everybody on a level playing field. And what these latest proposals, according to Solomon, showed was that, this actually makes it more difficult and more costly for U.S. banks to compete in a global financial system. And it also, this is something that's been expressed by a lot of bank CEOs, it has the risk of pushing a lot of lending outside the regulated bank system into the non-regulated bank system, and has the potential of increasing the costs. And that's something that Barr also notes in his remarks, that they want to make sure they're striking the right balance of a resilient banking system with an efficient banking system. They don't want to be driving up costs for farmers, for small businesses, for all those cohorts that had been putting in comments that were criticizing the initial proposal from 2023. So he's definitely been, pouring through those comments as well as the other officials. And it's clear from these remarks that he is giving them a nod that he sees that the initial proposal may have been increasing costs and may have hindered bank competitiveness.
And now what? It goes through another comment proposal on these new rules?
It appears that way. A reproposal indicates that it would go through a comment period. Unclear how many days that would be, but the norm is 60 days. Now, the original proposal, they had to extend that comment period because they had such an onslaught of comments. And then, of course, they took a lot of time to make sure they were reading through all of those comments. So, yes, that would be the process.
Okay, Leslie, well, we appreciate you bringing us that breaking news ahead of this commentary from Vice Chair Barr at the Federal Reserve announcing the reproposal of Basel III Endgame. Leslie Picker.